Hello, I'm Karen Simmons, President and CEO of the Chester County Community Foundation. We are very proud of our grant-making process and the investment process that makes that possible. Please join us for a couple of moments while we explain our investment process, as it is a rather complex model that serves our need well. First, let me talk about the mission of the Community Foundation. The Community Foundation connects people who cares with causes that matter, so their philanthropy makes a difference now and forever. We do a variety of things, but many people know us because we're a collection of quasi-endowed and fully endowed funds that we hold in trust. The Community Foundation is entrusted with a number of funds. Some are donor advised funds, some are field of interest funds, some are nonprofit endowment funds, and some are scholarship funds. Over 400 individuals, family members, and community members hold funds with the Community Foundation, and those are the people who make grant decisions. This year so far, we've granted out over $6 million to all kinds of causes throughout the region and throughout the United States to connect people who care with causes that matter. So you can see how their legacies can make a difference now and forever. We would not be able to grant out these funds without a strong investment process. And so to that end, I'd like to introduce you to our investment committee chair, Phil Wagner, who's going to talk about our investments overall.
Thanks, Karen. The objective of the foundation is to provide support to the community in perpetuity. Our principal financial resources are our endowed and quasi-endowed accounts, which are managed to achieve or exceed our minimum financial benchmark, which is comprised of the spending rate, historic spending rate, the administrative costs to manage the foundation, and the general level of inflation. We also seek to manage the level of portfolio drawdown risk or interim principal loss, which might impede our ability to provide financial resources into the community. Now let's take a look at how we allocate the investments to the foundation. Growth assets, such as common stocks and private equity assets, fuel the long-term appreciation of our portfolios. Fixed income assets, such as investment-grade bonds and cash, provide ready liquidity and serve as a stabilizer when the stock market gets volatile. And finally, the diversifiers carry traits of both growth and fixed income assets and serve to further diversify the portfolio. The endowed accounts are skewed towards growth investments to maintain our ability to provide financial support over the long term. In the quasi-endowed accounts, we maintain a higher target to cash and fixed income assets, as these accounts seek to have a more immediate impact in the community. And now let's take a look at how we manage the investments of the foundation, which is a partnership model between the investment committee, our outsourced chief investment officer, and other investment firms in our communities. The investment committee oversees investment policy and asset allocation and hires and oversees our partner investment managers. The committee is comprised of talented investment and financial professionals who work at leading firms here in the Delaware Valley. Hirtle Callaghan is our outsourced chief investment officer and lead manager. And in a moment, we'll hear from Chris Valerio and Phil Cook, who managed the foundation's portfolio at Hirtle. We also work with investment firms nominated by individual fund donors. Often, families and individuals have long-standing relationships with an advisor, and they want that firm to manage the funds that they established with the Community Foundation. Following extensive due diligence by the investment committee, these firms join our lineup under what we call the Medallion Partnership. Now I'd like to turn it to Chris Valerio to talk through Hirtle Callaghan's process. Chris?
Hi, everyone. I'm Chris Valerio from Hirtle Callaghan, and I serve as the investment officer. I think as both Karen and Phil illustrated, if we kind of trace that whole thought process through with over 400 funds that make up the foundation and the goals and objectives of that portfolio, it's critical to make sure that you've got the right structure in place to guide those assets on a day-to-day basis. And one of the things that we see is there's continuing complexity in the markets, and that's what this diagram is trying to show that in the mid 70s, we basically had three asset classes to invest in: stocks, bonds, and cash. And you fast forward to where we are today, operating in today's markets, we have everything from derivatives to hedge funds to other asset classes that potentially could be utilized in the portfolio to provide either risk controls or return opportunities. And one of the things that we've seen is investment committees and the Community Foundation's investment committee is made up of very strong investors who are highly knowledgeable, but they only meet quarterly. So what we've advocated is a structure that allows a chief investment officer, such as Hirtle Callaghan, to guide the portfolio on a day-to-day basis and be then fully accountable for thinking about total portfolio construction and really close that fiduciary gap that we often see in some investment programs. So if we think about that structure, what it looks like in reality is we've delineated the fiduciary responsibilities across three main focus areas. First, the governing fiduciaries, which is the board and the investment committee. Us, Hirtle Callaghan, serving as the chief investment officer, as managing fiduciaries. And then underneath that is the operating fiduciaries, obviously working with the custodians, but most importantly, running the total portfolio, overseeing the best-in-class investment managers that we hire to guide the portfolio, that are the individual stock and bond pickers. And our job, obviously, is to make sure that they're all doing their job. We're doing thorough research and due diligence on those managers to pull the total program together. One thing I did want to point out is we spend a lot of time thinking about active risk management. And I think this points to our partnership with the Community Foundation. Active risk management to us means both at the operating level for the Community Foundation, thinking about risk management at the donor level from a spending perspective and trying to maximize return relative to that risk constraint. And then third, working with the investment committee to think holistically about risk, everything from illiquidity risk up to overall portfolio risk. So we become, as the chief investment officer, an extension of the staff. Let me turn it over to Phil Cook to talk a little bit about the portfolio.
Thanks, Chris. So the first thing I'll touch on here is the speed bump policy, which was put in place by the Community Foundation's investment committee, along with Hirtle Callaghan, coming out of the financial crisis. And what the speed bump tracks is it looks at the rolling 9-month trailing return for the endowed funds, and it looks at it against that green line here, which is down 10%. And anytime that trailing 9-month return drops below the green line, the investment committee gets together and decides whether or not they should reach out to anyone who has a fund with the Community Foundation and make sure that they're aware that the market's down and their portfolio value is down, and that granting money at that point in time could have a negative impact on the future growth of that portfolio. Again, this is just meant to be a communication device. There's no restrictions put on spending. We know lots of times when this has been breached, even though it's only been breached a couple times, the community is in most need at that point in time. And so the funds are still there to be spent. It's just meant to be a communication so that everyone is on the same page and understands what's going on in their portfolio. The next slide, I think, speaks to the asset allocation. So Phil Wagner went through the main goals of the Community Foundation, being to grow the portfolio net of the spending, fees, and inflation, and then also reduce any drawdown risk in the portfolio. So you can see the portfolio that's been constructed. Again, this is the long-term policy that the investment committee, along with Hirtle Callaghan, has constructed. And in the growth assets up top, you can see our long-term target is 70%, right? So this is that growth engine in the portfolio, made up of mostly public equities across the globe, as well as some latitude to move into commodities or REITs opportunistically if they were to become attractive. And then also a dedicated position to private equity to be able to capture some of the premium from the illiquid private nature of those investments, as well as gain access to some of the top managers in the world. Going down to the bottom, fixed income, you can see is a 19% target. Again, this is your investment grade fixed income and really meant to help dampen volatility within the portfolio. And then in the middle section there, you can see the diversifiers. So this is where, so private credit, you could see as a line item, as well as corporate opportunities, which is mostly made up of public high yield funds. And then in the middle there, hedge funds, which the diversifiers role is, they have some equity-like characteristics and some fixed income-like characteristics. And the benefit there is to help build diversification in the portfolio and other return sources that aren't in just pure equities or fixed income. The ranges to the right are the discretion that the investment committee has given Hirtle Callaghan to move around those long-term targets based on the opportunities that we see and our investment team sees, in order to maximize the return and also manage the risk of the community foundation's portfolio.
Thanks, Chris. Thanks, Phil. Karen, back to you.
I just want to thank everything that each of you does. Phil Wagner on a governance level with the board and the investment committee, and Bill Cook and Chris Valerio on a managerial level, assisting our controller and staff. Thank you for your CIO role. And without your expertise on a day-to-day basis and on a governance basis, we would not be able to be so generous in our grant making. Your investment work helps our donors, and it connects people who care with causes that matter. So their philanthropy makes a difference now and forever. Thank you for all you do to help make Chester County a better place for everyone to work, to live, and to enjoy.